Hey guys, so just a real quick update with regard to the market. So at one point today, the markets were down over 900, almost 1,000 points to the downside. And I want to talk about what my team and what we do to be able to go ahead and stay green in a market that's red. Even when the market closed and it pulled off its lows, the market still was down over 500 points. So those people that are in like mutual funds or you're buying in, you're holding, I got to tell you, it's probably a sea of red right now for those accounts. In our situation, we are very, very active in the marketplace, and it's what I tell my clients. It's something that you have to be able to, if you're going to manage a portfolio, your job is not just to protect that portfolio. We look at Kinsey Trading, we look at our position as being the guardian of your wealth. At the same time, you also have to be able to learn how to pivot, and how to change gears. There's times where buy and hold, it works for a period of time. And there's times where a swing trade, where you hold a trade for, a couple months or even a couple weeks, and it works. In this market, if you try to do that, you're going to get killed. There's too many unknowns out there that make this market very volatile. Even during during the intraday markets, the market just swings up and it goes down, it goes up and it goes down. So there's too much of that volatility if you're going to go ahead and buy and hold or even swing trade. And if your stomach can withstand seeing your account red, well, then maybe that's okay for you. But what I like to be able to do, because I believe that you can make money in just about any market if you are nimble and you are water. I believe we are water. Our strategies, they change and they shift and they pivot all the time. So right now, today, when I saw the market was down, so it was a couple of trades that I had on for myself and for the clients, and those were like Smith and Wesson. There's a lot of reasons I went with that stock. I had sold puts on it, which is really like a stock substitution trade. And I thought to myself, okay, if I get put or get assigned the trade, assigned the shares, I'm okay with it because I'm going to get it at a discount anyway, because of the credit that I took in when I went ahead and I went short the puts, and I got assigned the trade last week. Got assigned the shares, and I'm okay with that. But then I saw the market down this morning. The futures were down red. The market was just glowing red, and I thought, okay, what do I want to do here? There's certain things that I'm either going to go ahead and take a look at companies that are on my watch list to trade to the market to the downside, or I'm going to look at my watch list and trade companies to the upside. And I went ahead and I think in the first 15 minutes I put on protection on the portfolio, the overall portfolio. I bought insurance on the portfolio, and that was very profitable for me. I saw the market starting to give me some signs that it was going to turn around and come off the lows. So I closed out that position, the insurance position. I closed that out, capitalized, and put that money in our pockets. So that added green to the portfolio. And then I went ahead and I thought, do I want to go ahead and close out my current position, my Apple that I have on? And I just recently got Apple, not a very big position. But I thought, and I actually had it hedged. I had my bigger position on Apple hedged. But I thought, do I want to close out my positions, or do I want to find a way to go ahead and make up some ground? And I chose the latter. I found a way to make up some ground. So then it was a question of off my watch list, and you always want to be prepared. You always want to be able to take a look and be able to have, be nimble, so you can take a look and say, okay, if the market is on an aggressive downward trend, then I want to go off of my watch list where I can short these particular companies. Or if the market looks like it's going to rebound, which it did, I want to go ahead and go long these particular companies. So with the volatility in the marketplace, I saw that there was some relief in the marketplace. And I was listening to my Squawk Box, and I was taking a look at my different screens, and I decided that I was going to go ahead and trade Shopify, or not Shopify, Shop. Yeah, it is Shopify. I was going to trade Shopify, SHOP, to the upside. And it had pulled down, and I saw it bouncing, and I day traded it. So I went from being, a lot of times my typical strategy is I like to be able to hold trades. I'll hold trades for a couple weeks in a normal market, whatever normal happens to be. There's times where I'll go ahead and I'll swing trade for a couple of days and cash out on making profits. That's typically what I had been doing. But in today's market, in the market that we've been in recently, with all this volatility, with all the news that's coming out, it's driven by news, I've been day trading, or hedging aggressively. So I had the positions I had hedged, but the cash I had in the portfolio, I thought to myself, and I was parked in quite a bit of cash. I thought, I'm going to day trade. I'm going to day trade the marketplace, and I'm going to day trade, and so then it was a question of going long or going short, and I decided to wear the hat of a bull. And the market did rebound. It came off its lows. It went from being down as much as over 900 points to the Dow closing and it was still down, but it was down about a little bit over 500 points. But I day traded Shopify, and I went in and out of that trade a number of times, and had the account going from a little bit green to a bright green. And that's just being very active in the marketplace and being able to not be emotional, not take a look and freak out and say, oh my gosh, the market, the sky is falling, the market's red, but being able to understand and be prepared to know what direction you're going to trade and what stock you're going to go ahead and gives you, what stock gives you the highest probability of coming out green. And, it really is just a matter of being clear with your mind, being clear with the plan, and using the right strategy at the right time. You're not always going to have a green market. You're not always, when I say green market, like today was red, but the counts were green. You're not always going to end green. But if you go ahead and you follow a system and you have a plan and you're adjusting your strategy to meet the demands of the current market conditions, your chances of doing well increase dramatically. Hopefully you enjoyed this. This is Bruce Dinger. Take care.